Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.
Welcome to Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions today, David Shapiro, Sasfin Securities, Schalk, Louw, PSG Wealth, Old Oak. Be sure to send your questions through email to stockwatch@bdtv.co.za, SMS 41392, or on Twitter @BusinessDayTV, #Stockwatch. Gents, thanks for the time. The first question I got a minute ago, why is Italtile down 10%? It's ex-div, so that's the dividend, isn't the reason for that. But Schalk, Italtile in of itself, they're in a tough space, and we saw some consumer spending out of yesterday's GDP, but man, 0.8%.
I think, you're asking me two questions there. Are we happy with the 0.8 and, looking at Italtile? Yeah, Italtile will always be a consumer. It'll always be, if interest rates are looking attractive, people are building and types. When we had lockdown, people did some renovations. This is the type of company that you were buying. It's always been a fantastic dividend payer. Mm-hmm. And I think today's movement has sort of proven that again. That 0.8, I think we should sort of celebrate that. Looking at the 0.8 itself, this is the largest growth we've seen in one quarter, since I think Q3 2002. So it's been a while since we've had this type of growth, and I know they've only expected 0.5%. So yeah, it's you're looking at a year-on-year growth, 0.6. We've often had this conversation. It's not good enough. But they always ask the question, how do you eat an elephant? It's like that, one bite at a time. So I thought this was a pretty big bite, and let's celebrate that.
I'm not eating no elephants. David, it is moving. GDP's in the right direction, but man, we've been stuck for decade and a half now, pretty much going nowhere.
Totally. And I just looked at Italtile's price while you were talking, and the dividend was 22 cents, the share's down over R1.
There was a special dividend as well, wasn't there?
Yeah. So R1.10. R1.10 in total.
Oh no, you explain it, because I got a bit worried, and there was a late trade that I picked up, which was done early this morning, was very late from last night, of about 500,000 shares. So someone was after that dividend or whatever, or someone didn't want it. Okay, you've explained, because I couldn't reconcile that. I'm with Schalk. I always like the business. Simon, the only thing is that, when I do my running around the neighborhood, there's no more projects, hey? There are no more, whatever it is, townhouses being built, things that really come to a standstill. And I don't know whether that's eventually going to push up the price of housing, because there's not a lot of stock around, but everything, and even on the horizon here, you can't see any cranes. Nothing's being built.
Yeah.
So somewhere along the line, if there is a bit of demand, prices will go up.
There was a report from Uber, not the vehicle company, the home loan company, yesterday, talking around Gauteng house prices. Tshwane knocking it out the park, but even Joburg up 5.5%. Just not a lot, but I think it's 5.5% more than we've had for a long time. Schalk, you in the Western Cape, you keep very quiet. You stay right where you are, and you keep quiet. David, let's touch on Old Mutual results. A couple of questions. Nice increase in dividend yield, big share buyback. How much of the numbers are market sort of growth which benefits them versus them actually organically growing the business?
I think that's, we've seen it with all the insurers. The market has helped them in a big way. The other one is the underwriting margin is up. In other words, that means that you're getting more premiums than you have to actually pay out. There's always that margin. So there haven't been issues in that area. What I'm trying to say in a nice way is that people aren't dying as much as we thought they would. But you saw it with Momentum. We've seen it with Sanlam as well. Those margins have held, and even with Santam as well on the other side of it. So I think the insurers have been doing pretty well on that side. But Simon, come down to growth now. We can see volumes coming down on new products, on sales of what is their traditional business. That's not growing. So I think we've seen it with all the insurers. So you're right. The market has contributed a lot to the growth that we've seen, or to the numbers that we've seen.
The numbers. Schalk, I mean, as a shareholder, you take the growth any way it comes, absolutely. Your thoughts on the Old Mutual numbers and the opportunity that Old Mutual presents? I mean, it's been a weird investment for the, 20, 30 years it's been listed. Your thinking?
Yeah, that's taking a long-term investment to a whole new level. So, a really whole new level. I mean, I need to look at this really politely. My mom always taught me that when you want to say something bad, you need to think about 3 good things at least. So I'm going to really try hard with this one. Dividend. If you like your dividends, I mean, then naturally this is still a good company. Just more than I think more than 6% dividend or expected dividend yield. At an ROE of around about the 13% levels. I mean, even if you look at the analyst, I mean, I recently look at it. I don't know if it's changed since results or updates. But you can see even the analysts don't expect any growth in Old Mutual. So, yeah, I think it needs to reinvent itself. I mean, David, you and I had this conversation about local insurers or life insurers, how it's a very, very difficult space to be, and very similar to, let's call it, the telcos. I think it's an industry that needs to reinvent itself. We've seen it with Sanlam, going really strongly towards the financial service, the investment services size, and that's really helping them, currently. And that would why Sanlam would still be my preferred pick, compared to the likes of Old Mutual.
Okay, your mother will be proud of you. You handled that like an absolute pro. Schalk, let's stay with you. Let's touch on Remgro trading update. It's just an update. We don't get to see a lot. Some nice growth coming through. You and I have chatted a number of times around these holdcos and the discounts. Does the update, does the discount, does this excite you, or is it just, Mediclinic and a couple of other businesses?
Oh boy, yeah, no, this has been my stock pick a few weeks ago, so I'm not about to go against that call for now. I thought the update looked really, really good. I mean, 33% to 43%, rise in HEPS. That's always looking good. You and I have had this conversation, as you just alluded to. I mean, about the large discounts. I'm still seriously dumbfounded why this company is trading at such a large discount. 40-odd% discount to intrinsic value. The underlying investments are doing really, really well. They've mentioned that the lower finance cost is really helping them as well. And let's not forget, I mean, we'll wait and see what the rest of the results will come out and what they've done. But I mean, when you look at the previous set of results, they were sitting with about 7.5 billion rand, cash pile on the balance sheet. That is attractive. So yeah, I think good sort of trading update. Still something that I'm holding. Definitely not something that I will be planning to exit anytime soon.
David, does Remgro excite you? I mean, I'm old enough to remember, as are you, when that discount used to be 10, 15%. Now it's, 30, 40%?
Yeah.
Remgro for you?
Not since the days that they unbundled Richmond and whatever, British American Tobacco. Since then, I think it's just kind of hobbled along. What's it got now? Mediclinic, which it bought back. I don't know what it wanted to do with that. What else have they got? RCL?
Some dark fiber.
I see they've done a big deal. They've unbundled eMedia. I mean, all 100 million of it. So eMedia, I didn't even know it was listed. EME, I had to go look it up or something like this. It's got a market cap of 100, which they're getting rid of. But Schalk, the share price looks. I mean, the chart looks okay, but I just think it's lost its charm. So people say, why do we really want to hold it? I know that discount exists. The only time it's going to happen is when they pay out everything to you, when they unbundle everything. I think then the discount will close. Until then, it's a boring company from your part of the woods. I laugh because I've been trying to go through Craig Martin's book, Bullon Bank is behaving badly. I don't know what you chaps get to down there in that part of the woods.
I love it when I hear this type of comments, David, because I always hear Jaws music.
Hey,
It's
Schalk,
just when you thought it was safe.
They've all got it in for Stellenbosch,
don't taunt my guests. Don't taunt my guests. David, before we go to break, Walmart coming to South Africa. Should anyone be worried?
I don't look. This is Massmart in a different way. That's
Sure.
all it is. In what they're going to do, I think there will be an initial attraction, but they've got to be pretty smart to knock out ShopRite or to knock. I suppose the others, or even Woolworths in food or wherever. I think it's not going to be that easy. And if you go into a Walmart store in the US, yes, it's very nice, but I mean, it's just a bargain kind of area. So what they're going to do special, I don't know, unless they start with something really spectacular. I just shrug and see. Okay, I think ShopRite Peter Engelbrecht says, okay, let's see what we can do with you.
I mean, Schalk, they've kind of been here. Of course, they've had Massmart now for, it'll be 15 years next year. 15 years next year. They've kind of been here. I mean, we've got some top retailers.
Yeah, we've got top retailers, and like a lot of US brands have found out over the years, it's not an easy market to penetrate. And when I'm talking about the market, I'm talking about the South African market. Looking at the likes, and that's a different market. But how Domino's Pizza, I was so excited seeing Domino's Pizza in South Africa, and that was not a success. I think I would agree with David with this one. I mean, I think ShopRite is just looking at this, and I don't think they're looking at this as a major competitor, but I think they might be looking at this as sort of an opportunity. But it's a difficult market. I think they're going to struggle.
Just one point. I know you're in a rush. They've got to find premises.
Well, that too, because they do giant premises, eh?
You've got to find premises, and I don't know whether they're going to take pick and pay in a lot of areas or knock them out and that, but that's not easy. Remember, so many of these large, whether it's Woolworths, are already in the better malls. Even the smaller malls. So how are they going to do that? It's going to take a huge amount of time.
Yeah, I hadn't thought of that. They're going to need locations because Walmart is a giant space. David, let's go to the big story of yesterday. Anglo and Trek. I mean, they're making a giant 50 billion majority copper business. They're also stopping BHP Billiton coming back unless things go a little bit pear-shaped. Is this a good-looking deal? The market liked it.
Oh, yeah. No, and how? I mean, it just changed the whole complexity of Anglo. The only thing is that they're going to Vancouver. And for those who don't know where Vancouver is it's right on the west coast of the United States, just above Washington. So it's on that side of it. So I mean, to go fly there is going to take a long time. But I mean, if you look at the assets, there are quite a few assets that they own jointly already, mainly in the copper mines in Peru and in Chile. But I mean, I think this will make a difference. Anglos are still kind of dragged down by a few of by the De Beers side of things, and also some other legacy issues. But I mean, it makes a lot of sense. It fits very nicely, and both companies want to do it. So it does push them up. It pushes their market cap up and gives them a little more, power against some of the other big players. I'm talking Rio's and Glencore and BHP itself.
Schalk, for you, I mean, this is the final, no, not the final, but I mean, it is, Anglo's left Johannesburg a while ago, been in London. Vancouver's going to be their head office. No more Marshall Street down in the city. Schalk, for you, what did you think of the proposed deal?
I think it's good. I mean, Simon, you and I had this conversation. I can't remember where we had it, but you actually asked me the same question, I think a week or two ago, about Billiton. Maybe, and remember my words were, do not expect just Billiton, because two dogs fighting about a bone and the third one swooping along. Trek came in and just did it. What I like about this deal, this deal, I mean, if they mention a few things, and how they usually say, the proof of the pudding will be in the eating. So we don't know what that's going to look like yet. But I mean, when I look at what they've already mentioned, they mentioned things like when you do a successful deal between two companies, aka merging these two companies, you want to see 1 + 1 equaling 3. And they've already mentioned, I mean, if they're going to combine these two companies, they're looking to increase the amount of copper that they mine by 175,000 tons per annum. I mean, that's massive. I mean, so this is becoming one of the largest copper plays in the world. I think I've seen somewhere along the lines it's going to be one of the top 5. And I think this will put Anglos in a totally different league. This will also put a nice and a different spin on the JSE again. I know it's not a pure JSE play now anymore.
Sure.
But I mean, looking at the weight, what we're going to be allocating towards commodities within our JSE All Share, that will be increasing as well. So, boy, we will need to get our act together in terms of commodities.
Yeah, and you'll have a nice, sort of not pure, but a nice dense commodity, copper play on our market.
Love it.
Schalk, staying slightly there, question came through around Kumba Iron Ore. In the view of the panel, a buy at the current levels, but it only has iron ore. That makes it risky. Would BHP or Anglo be better? Of course, BHP and Anglo are both running off towards copper. Your take on iron ore at this point? Was iron ore a bit of underpriced yesterday's metal?
Yeah, I still think it's lagging. But we would need to see China really picking up. We're not seeing the China growth story coming through yet. They're doing way better than what we've seen a year or two ago, and I think the forecasts are looking a little bit better. Kumba Iron Ore, it's always been an extremely volatile, cyclical type of company. One of those nice dividend payers. But I mean, it's going to be an interesting story, Kumba, because this is going to be pretty much the only thing that Anglo's got left in South Africa. And looking at this combined two companies, will they be looking at this and say, well, either we keep it, maybe just buy it out because they will in essence have enough cash to do that, or just sell it. So there could be a possible corporate action story coming along on Kumba, after this deal is done.
Yeah, they planned to sell it once before. Anglo changed their mind, kept them, and then Billiton, and then when they did their review last year, kept it. David, iron ore, Kumba for you, or rather go one of the big majors and do it diversified?
I think as a simple play, it looks very cheap. We back at levels, the share price back at levels that we saw 5 years ago, and iron ore is creeping up. It's still at the 100 level, but they mine it, I don't know, $30 or $40 a ton and sell it at 100. So this is not a company that's going bankrupt. This is not a company on the margin. So they can survive forever. The share price might not respond that well, but it's not a business it's not a company going out of business. So when you look at the levels now, it does look very, very cheap. But the share price I don't know why people are not buying it. That's the only thing that worries me. Why it's so low against the backdrop. Like, I don't know what its PE is, whether it's 7 or 8, and dividend yield of 8 or 9. But I don't know what's holding people back. Why they're ignoring this. But it's not a business that's failing.
And they do have, the iron ore is actually slightly better quality, and they get a little bit of a premium price from it. David, question coming through. China ETF, I bought it a while ago. It's now back at break even. Do I carry on holding on? Would you hang on to China at the current levels?
No, that's what we always say. You buy in a boom and you wait for the next boom to get your money back. See, so he's got his money back. Go. There's so much other things happening. When I say other things, why do you want to take on China where, the property market is still under pressure and the consumers are still under pressure? I know IT is taking off and everybody's rushing in and, we're getting bored with America, so let's go find emerging markets. As soon as we say that, I start to worry, but I don't know. I watch for it in the consumer companies, in the luxury businesses and so on. I still think there are a lot of issues there.
Schalk, China?
I'm sure out of every 10 people you'll find 9 will be positive, me being the negative one now.
Schalk, are you one of the positives? What's the take on China?
You're asking the wrong person here, Simon. You know David. For David, West is best.
No, I know. We've got to give him a chance to change his mind, but he's getting a little older these days.
No. No, what's the thing about old dogs and new tricks? So, okay, just I think a quick one. I mean, it's one that I've been following. I do think, like I've mentioned, China is picking up again. It did lag, and as this person mentioned, that he bought it way lower. We're now breaking even. When you look at, and I like monitoring the US internet companies compared to the Chinese internet companies. And when you compare the two, you can see that although we've had a nice comeback, I mean, 10 cents back to all-time highs, Alibaba, those companies are doing really, really well. They're still lagging the US counterparts by a country mile. So, I mean, I know there's some good reasons. They should be trading at lower multiples, but on a price relative basis, I do think that there's definitely some upside opportunity.
Okay, so here's the stock with potential upside, Woolies. And the question is, surely $50 is around fair value for SA food ops. We're getting fashion, home and beauty and Australia for free. CEO was saying worst is behind them for Australia. Schalk, do you buy the Woolies as a great opportunity at 50 odd?
I know where this question came from. It's clearly somebody that listened to Mr. Bickard himself over the past week or two. I've listened to an interview that somebody had with him. Somebody had with him, and he mentioned that this would most probably be the share. And when I say company, the company, it's Woolies that you would be buying. I mean, this is standing out as one of the best buys. Mention, as you just said, if you look at if you value the food company itself, it's a little bit more than 50 Rand, so you're pretty much getting the rest for free. And then you also mentioned a few good things which I actually found really interesting, and I know that people on Stockwatch would like this as well. He said the most interesting part is when you buy a company that literally just fell out of the MSCI world, there's people that actually could have made a great living. Now, companies that he mentioned, Tiger Brands, that fell out of the MSCI world, 130 Rand, now trading way over 300 Rand. Impala Platinum fell out 35 Rand, now trading 180 buck levels. And Exaro, the same story. Woolies just fell out. That could be an interesting play. So I don't own it. Definitely something that I do like. I would like to see the food and then let's call it the other businesses of Woolies being listed separately. But I've been asking this for 15 years. I don't think I'll be getting it this year.
And David hasn't shopped there in a decade. So, David, I'm not going to ask you because we need to go to our stock picks. David,
I still like Woolies nectarines compared to anybody else.
Yes, best nectarines. Hear you on that. Yeah. So, David, you're going with Oracle, a stock that since the close last night in the aftermarket trade is up, and I need to get the correct number here. Let's call it 32.5%.
Yeah, that will make it a top 10 business in the United States. But what impressed me was the numbers on, this is a Johnny come lately into cloud. And they kind of muscle their way in, but have done incredibly. And why I like it is that it just shows you, it gives you some see-through into this business, into the cloud business and how much people are paying, for data and so on. And that's, in a nutshell, that's what I like about it. And I'm just worried about where it's going to open, from that point of view. So the recommendation comes with a health warning, but don't ignore it. Don't push it aside.
Yeah, no, I mean, it's going to go through, maybe it might, well, no, it won't quite get there. It'll be close to $1 trillion if it opens at 32% higher. Schalk Growth Point, results out today. I mean, almost boring, not a bad thing necessarily. Nice yield, good discount to NAV. What else you got to add to your Growth Point story?
As the saying goes, simple is safe. And you called it boring, I call it simple, it's safe. Now, I think it's been one of my stocks, let's call it a month or two ago, as one of my stock picks. It's done phenomenal since then. Results out, as you mentioned today. The results look pretty stable. I mean, that's good for a property stock. The outlook is looking good for the V&A waterfront. But they're still trading at a 28% discount to NAV. And why that's important, although I don't think we'll see that massive premiums that we've seen 2010, 2011 It's 28% discount to NAV. I still think it's a little bit too deep. Mixed into the let's call it that recipe, a 9.5% expected dividend yield or interest yield. I mean, I do think it's still a nice company to have in your portfolio. Results were fine, and definitely something I'll still be holding.
Yeah, and that VNA is going to be one of the best assets, not in South Africa, it undoubtedly is, probably globally. It's up there with top assets. That's all for Stockwatch today. Thanks to our guests, David Shapiro, Sasfin Securities, going with Oracle, Schalk, PSG Wealth, Old Oak. He's going with Growth Point. Remember to tune in next Tuesday, 5 p.m. We're bringing you the JSE Stock Pick event, where you will get inside analysts on some of the stocks that are catching the eyes of the investor community. That right here on Business Day TV. Up next, the close.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.